Investment returns and right capital. I've had a couple of you guys, more than a couple, say, ask me, what are the rates of returns on the various investments that you have? And I just want to go over this because this target allocation will be blacked out for you, or grayed out, I guess. You can't mess with this. I'll show you a place you can mess with it, but you can't do it here. So where I can change all this, you can't. All right, so basically what's happening here is once you import your investments into the software, so we go to Profile, and then we go to Investment, and you have all your investments situated in here. All right there. So in this case, Wellington Fund. Once all that's gone, it's going to import it in there by the ticker. Hopefully you're using a ticker symbol. Hopefully you're not just leaving it in cash. If you leave it in cash, it's not going to, well, it'll work, but it's just not going to be reflective of your true portfolio. So anyway, you can see I'm using a ticker sticker, Wellington. And to do that, you simply, so you have add account, investment, we'll say Maggie's, I don't know, Roth, we'll just use that. So we go to taxable, we go to Roth right here, make sure it's the right owner. We're not having anything in cash, and we'll just put it into add holding, VTSAX, and then we'll say 100 shares. And you hit save. Literally, that's it. That's what you do to add the account. No big deal. Pretty simple. And then we'll go to investments. And it'll show them 65-35 stocks to bonds. So I got 53.8% equities, 9.8% international equities, 27% in bonds. So you get how that works. Let me go ahead and take this out right here. Her Roth right there. Boink. And they'll be deleted, and they'll be a little bit less aggressive now. Oops, I want to go to investment. There we go. Go to investment, and it's 64.36. All right, so you can see it changed a little bit. All right, so again, you don't have access to this target allocation here. You do have access to it under retirement. All right, so you click on this guy, and then you scroll down here, and there'll be this action items button. You got to click on action items. You click on that. And here's the asset allocation. You can, so look, we got, what we're doing is we're saying we are right now, if we go back to the current allocation, we have a 64.36% portfolio return. 5.2% returners are what we're expecting with a 10.7% standard deviation. All right, so if we go to retirement, we're at 64.36. We already said what we're going to get, that's our current allocation. But if we change any of these, let's say we change it to U.S. total stock market, and we hit refresh, this will change up here from still probably 100%, but we went to $966,000, what we're leaving from 964. So it didn't really change much in terms of the overall portfolio. I thought it would change it more than that, but okay. It didn't change it much. It only changed it by $2,000. Go back to current allocation. And what are we left here? 780. Okay, there, yeah. Okay, so what's the current plan? So that current plan, for some reasons, I'm not sure what's going on there. Why is that current plan so jacked up? Oh, right here, distribution strategy. There we go. We got to change that. All right, so let's just change all that to what it was. All right, so if we go back to the 964 under current allocation, the proposed plan, which is the exact same thing as their current allocation, we change the allocations to, we'll make it U.S. total stock market, which is 6.5. I'd imagine this would change it. Let's see. Yeah, to 1.195 million. So basically what's happening here is by increasing the risk, we're increasing the performance, and then that's increasing more money left to at heirs. Still have 100% probability of success. Now, if we change it to U.S. bonds, and I'll tell you exactly what these numbers are in just a second, it'll be a lot less, to 448. And there's a reason for that, because bonds are the lowest portfolio and stocks are the highest other than cash. And we can go to growth. You can change all these things and get a gauge. So I will tell you right now, hey, buddy, what we're looking at. So if you go to investments, now again, you guys don't have access to change this, but we're going to just go through the numbers. So the lowest return you can get is bonds, which is 2.1% with a standard deviation of 4.6. So definitely bookmark this tutorial if you're using Right Capital, because this won't change for another year. I change them on an annual basis. I don't just change them willy-nilly. So bonds are the lowest. Stocks, U.S. total stock market is the highest. I just reduced this to 6.5. I just changed the returns all down. I went to the left for every single one. 6.5 with a standard deviation of 17.3. I'll do another video probably tomorrow on standard deviation. Preservation. Remember, 2.1 and 6.5. 2.1 and 6.5. Preservation, 2.9. And you can see the breakdown here. Preservation is 20% bonds, 80% stocks, 2.9. 2.9. Conservative, 35-65, 3.8. All right, so just take a look at that. Balanced is 50-50, 4.5 is a return. Moderate is what, 60-40, 5. Moderate is 5%, 60-40. Growth is 70, I think, 70-30, 5.5. Aggressive is 5.9. Most aggressive is actually most aggressive because it has international stuff in here, emerging markets. So I consider that the most aggressive, but it's not the best rate of return because I do believe this U.S. stocks are better positioned. But anyway, you see most aggressive is 6.3. What do we say for aggressive? Was it 5.9? Yeah, 5.9. Most aggressive is 6.3. And then finally, that's 17.3 for U.S. stocks. I probably should make the emerging markets and the international have a higher standard deviation, but I'm pretty comfortable with that. So there you go. That's the portfolio in the software in terms of what the returns will be. Then again, if we go to retirement, you can click on this asset allocation and just remember what the numbers I just told you were. And you can get a gauge. You know, moderate is 50. I think moderate is 60-40. I forgot what the rates of return was. You just got to go back and look at it from the video. You again can't do this. I kind of wish you could, but you know they don't let you, so I can't turn it on. So moderate was 60-40, I believe. Yeah, 5%. So just remember, moderate is 5%. That's not a bad place to be. So you say, okay, it's 2, 5, and 6.5. That's not a bad way to look at it. Cash, on the other hand, if all you have is cash, it's 0.5%, 1%. Just keep that in the back of your mind. Hope this helps. And if you have questions, put them in the notes. Thanks now.